We've got the Target news. We've got the State of the Union tonight. We've got Jay Powell tomorrow. What do you do? What do you do? And, of course, Ukraine is the big cloud hanging over all of this.
Right. You don't do anything right now, Andrew. At this point, if you've got your allocation set, this is the worst time to panic, to reduce equity exposure. What I would do at this point is just look for some fallen angels. If you've got extra cash, I think there's some opportunity. But otherwise, you stay within your allocation. I think there's a lot of unknowns, but we've had a lot of unknowns for the last couple of years. And at this point, earnings season's over, and we look to see kind of where we can find opportunities.
Are there dislocations, though, where you say to yourself, okay, there's actually opportunity, something's amiss, and there's actually great value?
Yeah, so I would look at it a couple ways. One is, okay, what is going on in Russia that has affected the rest of the market? Obviously, when you got leasing companies and companies that have huge exposure in the consumer area, those have some dislocations that could have some at least longer term consequences. But look at other areas that, why are some of the U.S. banks selling off when they don't have any Russian exposure? They're very minimal European exposure. So like a Bank of America or Morgan Stanley that have sold off. You can understand that the Citigroups that have more exposure have sold off. And the other side is look at some other pure plays in the cable and media area, like a Comcast or Charter. Those should not have sold off. Those have. So those are opportunities there as well. And some in tech, like a Qualcomm. So you do have opportunities that have come down with the market, and they are not going to be affected as much as some of the things that are going on in Europe. Now, European companies that have a lot of exposure, European banks, European consumer product companies, there is going to be some sorting out to do over there. There could be some value there as well. Too early to tell, but I think on the other side, you can look at companies that don't have huge exposure that have just kind of been sold off for the rest of the market.
Is there anything that you think hasn't sold off that should have?
I mean, if you look at some of the areas, in some of the consumer companies, and I'm talking about Pepsi sold off a little bit, but some of the other areas there, yeah, I think there could be some potential there. Not just because demand is going to be destroyed, but also because costs are going to go up, supply chain is going to be disrupted. So I think you have to be careful there because Europe is going to be probably a little slower than we expected, right. And they were the ones to kind of lead us out of here.
You mentioned a number of names that you said you didn't think should be impacted and yet are being impacted. But part of that is, I imagine, not just a Ukraine story, but a Fed story, and what you think ultimately happens to multiples over the next 12 months, especially for some of the tech high flyers. But you talked about, for example, a Comcast parent company of this network, for example. Is that a multiple compression issue?
So interestingly, Comcast is not a multiple compression issue. That is more of a issue of what is going to be the cash flow growth going forward, and interest rates actually don't hurt it as much as some of the high growth PE companies that have PEs above the market multiples. The companies I've mentioned to you, the Morgan Stanleys, the Comcast, they're all below market multiples. We do fear once you get through this, and it's very hard, right? Because we're right in the middle of this, so it's hard to see through it. But hopefully we do get through the Ukraine crisis. Then you will see the Fed come into play. You'll see it tomorrow, and then interest rates will come back. And where is inflation? What is happening with the economy? So we're being very careful. We're not chasing high multiple stocks here. Even multiple stocks would have cash flow down the road. You just have to be careful here because I think the market is already reset or started to reset before Ukraine crisis. And now I think you're just going to be focused on cash flows and growth. And the other thing that we kind of touched upon is investors are going to look for relative growth. And now you've got something new here, where is growth going to actually slow, and relatively where is growth going to be better in other areas? We did not have that a week ago. So it's going to be even more of a stock picker's market, or where are we going to find opportunity in this market?